Welcome to Cyprus Tax Life. Today we're doing a proper comparison, Cyprus versus Dubai, because move to Dubai and pay no taxes has become almost gospel in the entrepreneur community. But is it still true? The short answer, no, not since June 2023. The UAE introduced a 9% corporate tax on business profits exceeding 375,000 dirhams, which is approximately 95,000 euros. Free zone companies, while still benefiting from preferential rates on qualifying income, face 9% on any revenue derived from mainland UAE clients. Add visa costs, free zone fees, mandatory health insurance, and housing in one of the world's most expensive rental markets, and the zero tax narrative starts to fall apart. Let's break it down. First, the corporate tax situation. In Dubai, since June 2023, you pay 9% on profits above 95,000 euros. In Cyprus, you pay 15% on all profits, so Dubai is lower on paper. But here's the catch. Cyprus allows deductions of 25 to 35% on expenses before calculating that 15%, so the effective rate is often much lower than it looks. Now, the free zone trap. Many entrepreneurs set up in Dubai free zones like DMCC, JAFZA, or DIFC, expecting 0% tax. And technically, yes, 0% applies to qualifying income. But qualifying income generally means transactions with other free zone entities or from foreign sources. Revenue from mainland UAE clients, taxed at 9%. The definition of qualifying is complex and has caught many business owners off guard. Let's talk about the hidden costs in Dubai. Before you even start doing business, you're looking at annual license fees of 2,500 to 12,500 euros. Visa costs per person of 1,250 to 2,500 euros. Office or desk requirements of 3,750 to 15,000 euros per year. Mandatory audit fees of 1,250 to 3,750 euros. And mandatory health insurance of 1,250 to 3,750 per person per year. Add it all up, and you're looking at 15,000 to 40,000 euros per year in minimum operational costs before any business activity, before you've made a single euro. In Cyprus, company registration costs about 2,000 euros. Annual maintenance is around 2,000 to 4,000 euros, including accounting. And that's basically it. Now, here's where Cyprus really wins, the non-dom regime. As a non-dom resident in Cyprus, operating through a Cyprus limited company, your effective overall rate comes to approximately 5%. That's 15% corporate tax on profits after generous deductions, then zero income tax on dividends with just 2.65% healthcare contribution. No wealth tax, no inheritance tax, no capital gains tax on securities. Compare this to Dubai, where even with the 9% rate and all the operational costs, you're often paying more in total than the Cyprus route. But this isn't just about taxes. Quality of life matters too. In Dubai, a one-bedroom apartment in a decent area costs 1,500 to 3,000 euros per month. Summer temperatures regularly exceed 45 degrees. You need a car for everything. And your residency depends on your business visa, which depends on maintaining that expensive free zone presence. In Cyprus, a similar apartment is 500 to 1,000 euros. The climate is Mediterranean, warm but livable. EU healthcare through the GHS system costs just 2.65% of income. And as an EU citizen or permanent resident, your residency is independent of your business. The bottom line, Dubai is no longer a zero-tax jurisdiction. When you factor in the 9% corporate tax, operational costs, and expensive cost of living, Cyprus, with non-dom status, actually offers a lower effective tax rate and significantly lower operational costs. Plus, you get EU membership, Mediterranean lifestyle, and none of the visa dependency. For the full comparison with detailed tables and calculations, visit cyprustaxlife.com. Next episode: 10 tax mistakes people make when moving abroad. Don't miss it.